Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today is that make or break day. Is this pump going to continue, or are we going to have a pullback? Because of course we do have the FOMC meeting coming out today, and the Fed are going to released released their interest rate decision, and as of right now, it is looking as though we're going to get a 25 basis point rate hike. So just bringing up this screen quickly, we can see 5 hours 58 minutes. And it's looking very likely that we're going to get that 25 basis points. Okay, 99.7% of the analysts think we're going to get a 75 basis point rate hike. Now, this is, sort of, as I said, that make or break day. Today is going to give us a good understanding for the rest of the year as well of how the market is going to react to this 25 basis point rate hike. Okay, so today we're going to look through the charts. And then later on today as well, hopefully I can come live for the FOMC meeting, and when the data is released, and we can see how the market reacts to that. So yeah, please make sure you smash a like on this video, and we will jump straight on into the video then. So yeah, as I said, later on today, we got that FOMC meeting. Hopefully I can come live for that. But yeah, we need to sort of have a good understanding. Today is going to be really helpful because it's going to give us a good understanding for the rest of the year of how the market is going to react to these FOMC meetings, okay, to the Fed increasing these rates. Because to be honest with you, we're most likely, I know we've got the conference after. Okay, let's bring it up here quickly. So we got the Fed press conference afterwards, which Jerome Powell, I'm sure, is going to talk about a lot of the future FOMC meetings as well. So he's going to talk about that as well, and that's going to obviously help move the market as well. But yeah, as I said, it's going to give us a good understanding for the rest of the year, because we can see how the markets are going to react to the interest rate decisions. Okay, last year we know, okay, that whenever we had an interest rate decision come out, the data come out, what we saw was that the price of crypto, especially, had a little push towards the upside, but initially in the longer term, dumped towards the downside. Mid to longer term had a catastrophic pullback. Okay, so we're the Fed are increasing by a decreased amount. Okay, that's good. Okay, yes, that's good, but it's not the best thing. Okay, we want to see the Fed completely stop increasing the rates, and because they're still increasing by 25 basis points, it's still bad for the market. It still does not look good for the market. Okay, so we do just have to be very, very aware of that. And the way I'm leaning towards right now is that the price is going to pump coming into it, and once the data is released, and then once everyone realizes that this isn't very good, this still isn't very good, we're going to see the markets crash. That's the way that I'm leaning right now. However, we could see something different this year. Okay, we could see that the price decides to push towards the upside, or we could just see the price dump. For me, it would be more that the price would either just pump, okay, or it would pump and then dump. I would not expect a dump straight after this 25 basis point rate hike. I would expect a pump and then a dump. If we don't see that, it would most likely be a pump. But, we've got other factors to look at as well, such as the DXY. Okay, the DXY was having a little bounce yesterday, okay, but then towards the end of the day, it pulled back. And today we are now testing this major support once again, which has been major support from back here. And this is a very, very critical level for crypto, even though it is on the DXY. Okay, we know that Bitcoin and the DXY are inversely correlated. Okay, so the DXY goes up, Bitcoin goes down, DXY goes down, Bitcoin goes up. Okay, so what we would like to see to continue this bullish momentum within Bitcoin is to see the DXY actually break towards the downside here. Okay, if the DXY can break towards the downside here, we are most likely going to see another leg towards the upside for Bitcoin, potentially taking us above 25,000. Okay, maybe even taking us all the way up to 30,000, depending on how far down the DXY goes if it does break the support level here. Okay, so it would be very, very bullish if the DXY could break this here as well. And the FOMC meeting is going to impact the DXY as well a lot. Okay, so we'll have to see how the DXY reacts to it as well. If the DXY decides to pump, okay, we're most likely going to see Bitcoin dump. But if we see the DXY dump, we're most likely going to see Bitcoin pump. Okay, so hopefully I can come live. It is my mum's birthday today, so we were going to go out, but hopefully I can come live for that as well. And I will update you anyway afterwards if I cannot come live when the data is coming out, but I will update you after. But yeah, we'll have to see what happens there. Right now for Bitcoin, we're still trading within this parallel ascending channel. Okay, so looking at it here, we can see that, we used the support multiple times yesterday, bouncing off it. Okay, but we're probably not going to see much movement up until maybe a few hours before. Okay, I know. Well, it's only how long? 5 hours, 6 hours away. But we're probably going to be quite flat over the course of today. And then coming into that FOMC meeting, we might see a little pump. Okay, and then the data comes out, and then we'll have to see how the market reacts after that data comes out. Yeah, it's nothing really too much to update you with. I pretty much said it all in yesterday's live stream. But yeah, hopefully, we can get a nice bullish reaction off of this, which will be good. But we also have to factor in the sort of take a step back and factor in everything else as well. Okay, I've mentioned this multiple times. Okay, 2 year has exceeded 10-year. The 10-year yield, we can tell because the 2 year is 4.197% and the 10-year is 3.486%. Every time we've seen the 2 year exceed the 10-year, okay, it's led into a recession. If we're going into a recession, it's not going to be good for the markets. Okay, traditional markets are going to crash, which is going to feed into the crypto markets as well. We're most likely going to see the crypto markets crash. So we do just have to be very, very aware of that. Every single time the 2 year has exceeded the 10-year, we've led into a recession. Okay, so it's looking very likely that we're going to go into a recession, or that we already are in a recession that just hasn't been confirmed yet. And once that's confirmed, or it's confirmed that we're going into a recession, then we're going to see America is going into a recession. We're going to see, catastrophic pullbacks, I would expect. And, that's not going to be good, really not going to be good as well. And we also have to factor in as well that the Fed are still increasing rates. They're still increasing rates. Yes, they're increasing by a decreased amount, but they're still increasing rates, and they could do this over the course of the year. Okay, that is not going to be good at all. So we do just have to take a step back. Yes, it's looking very bullish right now. Okay, we're seeing to an extent it's looking very bullish. Okay, we're breaking these resistance levels and we're pushing towards the upside. Okay, we've had some really, really nice momentum towards the upside over the last few weeks, but we do just have to take a step back, and we can't get caught up, and we can't FOMO into this pump. Okay, we do just have to take a step back and look at the broader fundamentals. Okay, recession is looking very, very likely. Very likely. Okay, we can even look at, I mentioned this a few weeks ago. Let's get rid of all of this. So, World Bank warns of a global recession in 2023. Okay, just another sign telling us that we're most likely going into that recession. Goldman Sachs is laying off around 3,200 employees. That was on the 10th of January. Okay, Coinbase is laying off 20% of its staff. They must know something. They must know something that we don't know. Okay, they're preparing themselves for a bad event. Okay, and this bad event could be the recession, which will lead into markets having a major crash towards the downside. Okay, so we've got to be very, very aware of this. Just take a step back. Okay, the charts are looking very good. Yes, okay, we've had really nice pushes towards the upside, but we do just have to take a step back, look at the fundamentals. The fundamentals are telling us that a recession is looming. If a recession is looming, we could have a major crash. And then, even looking at the technicals, yes, the technicals have been very bullish. We've been breaking resistance levels. Okay, we've been pushing towards the upside. That's great. Okay, but we are forming bearish divergences, like on the 3 hour here. We're forming bearish divergences here. We can even go to the daily. Okay, the daily here. This is a perfect example. Higher highs. Okay, 3 higher highs right there, and then 3 lower lows right here on the RSI. Textbook bearish divergence. It's looking prime, very prime for a pullback right now. And then if we come onto this chart as well, I mentioned this yesterday. If we can break above 25,000, great. Okay, that's great. Yeah, we can hold that support. We can continue towards the upside, and then we can be looking for 30,000. Okay, but we do just have to sort of take a look at the Wall Street cheat sheet and sort of look, where are we? Where are we in this psychology of the market? Okay, and where I personally think that we are right now is we are in this anger phase. Yes, we could be in this disbelief phase. That is an option. Okay, but just looking at everything, taking a step back, looking at everything and putting it all together, for me, we're looking we're looking like we are in this anger phase, or just leaving this anger phase right now. Okay, the technicals are telling me this. Okay, and also the fundamentals are telling me this as well, because of recession. Okay, if we're going to get that recession, we're going to have the final capitulation event. Well, I say capitulation event, sort of a depression event, where the price just slowly makes its way down, forming a new lower low, forming that low of the bear market, and then we can start coming into this disbelief phase. But looking at the technicals right here, what we have formed right here after the capitulation, okay, after the denial, panic, capitulation, we come and we form this low right here. Okay, then we form a higher, a high. Sorry, we form this high, then we form a lower low, and then a lower high right here. Okay, and this is exactly what we're forming right now on the Bitcoin charts. Okay, so bringing up this weekly chart, we've had this capitulation here. Okay, we've gone through denial, we've gone through panic, and we've gone through capitulation. Okay, let's just bring that up again. Here, we've gone through denial, panic, capitulation. Okay, and then we are forming this anger phase right here. Okay, this is what it looks like. It looks prime for this anger phase. Okay, we formed the low. Okay, we formed a high, we formed a lower low, and we formed a lower high right here. If this weekly candle does close below this, these two previous weekly candles here as well. Okay, then we're going to be forming this lower high. This is looking exactly like this anger phase here, meaning that we could be leaving this anger phase. Okay, we could be right here, and then we could start this final move towards the downside, taking us to the bottom of that bear market. Okay, this is the stage that I think that we are in right now. Okay, again, I could be wrong. I could be wrong. Okay, we could be in this disbelief phase. That's why it's called the disbelief phase. Okay, but looking at the fundamentals, recession. Okay, World Bank warning of a recession. Goldman Sachs laying off 3,200 people. Coinbase laying off 20% of its staff. Even Google. Okay, I read something the other day. I don't think I've got it saved up here. Let's have a look. No, Google laying off over 10,000 employees. Okay, now, is this because AI is coming into the world and sort of getting rid of all of these people's jobs potentially, but also it could be them preparing for something a lot worse than we've had already. Okay, and especially Goldman Sachs as well, laying off 3,200 people. Coinbase laying off 20% of its staff. Those are probably staff that they did not want to lay off, but they need to lay off to prepare themselves for this next worrying event, this last depression event. Okay, so we just have to be aware of that. We've got to take a step back sometimes. Yes, the price is having a nice push towards the upside, but it's looking like this anger phase right here. Okay, recession is going to lead into the price pulling back anyway. Okay, the rates continuing to be increased is going to bring the price down as well. Okay, so looking at it, it's looking prime that we are just leaving this anger phase here, and we're going to lead into this depression phase, and have finally sort of be happy that we are at the bottom of that bear market if the price does have this final capitulation event, depression event, whatever you want to call it, and potentially come down to 12,000, maybe even 10,000 as well. Okay, so this is what I'm looking at right now. I'm still expecting that price to potentially come down to 12,000, 10,000. I still think that's a possibility. Again, I could be wrong. If I am wrong, this is why, because disbelief. Yeah. Okay, but just looking at everything right now, technicals, fundamentals, it is still looking very bearish. Okay. And I don't just want to get bullish for the sake of it. I don't want to just get bullish for the sake of it because everyone else is getting bullish. I want to get bullish once I'm happy that we are bullish. Okay, and for me, it would be to break above 25,000, hold it as support. Okay, and then bounce off of there. Then we can start talking about 30k. Once we get to 30k, we can talk about breaking 30k and using 30k as support. And then, continuing over maybe the course of next year, slowly making our way back up to all-time highs. Okay, we're still very, very far away from where we want to be, but we will get there. Time will tell. We will get there, and we just got to be patient. Okay, and we might need to have this last leg towards the downside. Okay, and if that is needed, that's okay. What do? We accumulate. Okay, we accumulate. Okay, and then we wait for the bull market to start again. Okay, but right now, taking a step back, looking at everything, we're still looking very bearish. Okay, so technicals, fundamentals, still looking very bearish for me. If anything changes, of course, I will update you with that. But yeah, hopefully I will make it live later on today. If not, I'll come live a little bit after the FOMC meeting and just update you with what's happened. But 5 hours, 43 minutes. We do have that FOMC meeting coming out. We're going to get the data release. Okay, so the interest rate decision, which is looking like it's going to be a 25 basis points. Okay, that's good but bad. Okay, it's good because they're decreasing, but it's bad because they're still increasing. Sorry, they're decreasing the amount that they're increasing by, but initially they're still decreasing. Okay, so we just got to be very, very aware of that as well. But yeah, I will see you later on today for that live stream. I'll see if Ben is going to join us for that as well. But yeah. Let's have a look at the comments quickly. Angela M. Hi, AJ. Good to see you back here. Smash the likes. Yes, if everyone could just smash that like button, I would really, really appreciate it. It really helps me out. Really helps the channel out as well. I can continue to bring the trades and the content that I bring you as well. So, yeah, thank you very much for watching. And please smash that like button if you're new. Subscribe, turn the bell notification on so you never miss a live stream. And, yeah, I guess I'll end it here. And I will see you guys later for the FOMC meeting. So thank you very much for watching. Smash that like button and see you later, guys. Bye.